President Trump, you say we are in a V-shaped recovery. Vice President Biden, you say it's more of a K-shape. What difference does that mean to the American people?
Hello and welcome to The Nexus. That little clip was from the first presidential debate, which aired on Tuesday night. Now, if you watched it, you'll know that it was an unruly and bitter affair. However, that question about the economy is really crucial. Let's have a quick listen to how each candidate responded.
We closed it down, and now we're reopening, and we're doing record business. We had 10.4 million people in a 4-month period that we've put back into the workforce. That's a record the likes of which nobody's ever seen before.
Millionaires and billionaires like him in the middle of the COVID crisis have done very well. Billionaires have made another $300 billion because of his profligate tax proposal, and he only focused on the market.
So the president says the economy is bouncing back in a kind of V-shape, and he points to the stock markets being at record highs as proof. Whereas Biden claims it's more like the letter K, the line pointing up representing rich shareholders, and that line pointing down is, well, everyone else. So who to believe? In a moment, we'll hear from Dan Price, a CEO in Seattle, who fears we are in a K-shaped recession. And we'll hear from Greg Swenson, an investment banker and a member of Republicans Overseas, who says this recovery is a V-shape and is being felt across America. But first, let's leave the letters to one side and concentrate on the numbers that define the pandemic economy. For many of us, this is the story of the pandemic. Sitting at home, playing on our phones, spending more and more time and money with America's big five tech companies. They have been the real beneficiaries of this pandemic, and their shareholders, of course. Their share prices hit record highs recently. Meanwhile, out there in the real world, a retail apocalypse. The pandemic speeding up what Amazon had already started. The collapse of America's classic bricks and mortar stores. JCPenney, Century 21, J. Crew, GNC, and America's oldest clothing retailer, Brooks Brothers, all have filed for bankruptcy. Small businesses, so-called mom-and-pop stores, are also closing in their thousands. Restaurants, toy shops, hair salons, even veteran investors acknowledge this is bad news.
There are 5 stocks in the stock market now that make up 27% of the market capitalization of the S&P 500. This is the greatest wealth transfer in human history from mom-and-pop stores to 5 tech conglomerates, and it's going to lead to a long-term catastrophe.
That is a fascinating point. But at least in the short term, predictions of a catastrophe seem far-fetched. After all, the unemployment rate, which did soar in April, is steadily coming down. The number of jobs being created is steadily increasing, and GDP, which fell catastrophically in the second quarter, is predicted to rise strongly in the current one, albeit still down on a year ago. All of that sounds encouraging, but it remains to be seen if these economic indicators can return to pre-pandemic levels. The unemployment rate is still much higher than before, and only half of the 21 million or so jobs lost during the crisis have returned. And even if those jobs do return, are they going to be of the same quality? Working for $15 an hour in one of Bezos' warehouses is not for everyone. Or is it? Okay, let's bring in our guest now. We have Dan Price in Seattle, Washington. He is the CEO of Gravity Payments. And in London, Greg Swenson, who is from a fund management company called Brigg McAdam. Let's just get started with the shape of the economic recovery in the United States. Let me ask you, Dan, is it a K or is it a V?
It's absolutely a K, Matthew. And what I mean by that is you have record highs for a lot of these big tech firms. In a winner-take-all economy, they're doing better than ever because they're consolidating wealth and power. They're using taxpayer bailouts. They're using the public infrastructure that we've created in terms of the internet, the shipping capabilities, and they're using all of that against us to basically leverage their position for all-time wealth for the people on top. But yet The middle class is being squeezed, and more people are really just falling out and falling behind, where they are lost, where they can't pick up, and the middle class is squeezed. And the threat to the middle class from the people on top is, if you don't play ball, you're going to join that very bottom of the K rather than being in the middle.
Is it possible that both of those things can be true, Dan, that the big tech companies are doing particularly well, but that the overall recovery still resembles a V for everyone?
I don't think it's possible if you're looking at the data, because while it's true we have had somewhat of a recovery, it's stalled, and we have not put the people that we should be putting first in our mind, in our priorities, in our budget. We have had hundreds of billions of dollars go to the largest firms that have spent all of their money on buybacks, on CEO bonuses, and yet we continue on a daily basis to see people being laid off, people being left behind. And that group of people that just has no economic opportunity, no economic freedom, no chance really to get ahead systemically, that group is growing. And that can't be good for the economy in the short term or the long term. But the problem is we're not dealing with it.
Let me bring in Greg now. Greg, Dan mentioned the data. I know you come armed with the data, the unemployment, the jobs, the GDP. What does the shape of the recovery look like to you?
Well, there's really two parts to it. There's the recovery from the pandemic, and that's accelerated at a greater pace than a lot of economists expected back in April and May. And you had 10 million jobs created in 4 months. You've got record numbers in sectors like housing, where the home builders index is at its all-time high. You've had great rebounds in the manufacturing and service PMI numbers. So there's all kinds of, and household wealth hit a record despite the pandemic. Household wealth hit a record in August. So you've got a lot of bounce back from the pandemic, much faster than we expected. The U.S. GDP was down 9%. In the second quarter, but if you look at, Germany was down 10, the EU average was down 12, and you've got the UK down 20. So, the US is actually looking pretty good. And then if you look at the pre-pandemic numbers, contrary to the prior 8 years of the Obama and Biden administration, when you had massive asset inflation, especially in financial assets, so, the so-called 1%, or more specifically, the top 10%, were the only beneficiaries. And I can agree with Dan on a lot of points, and that's one of them. But during those 8 years, the benefits went to the rich, the big got bigger. These big, massive companies, especially the banks, actually consolidated and got bigger. And if you look at the big 5 tech stocks, for example, as a percentage of the market, it's at all-time records. So that was a tough 8 years where the only beneficiaries in that economy were the 1%, were owners, people that were already rich, owners of financial assets and property, while workers and wage earners suffered for 8 years. That flipped in the Trump economy. So you had 3 years of massive income generation. For example, in 2019, you had a 6.8% increase in the real median income. That's $4,300 a year, up to so the median income now is $68,700. That's 45% higher than the total income gains in the 8 years of the Obama administration.
So Dan, Greg is saying that basically President Trump is handling the crisis that he's been dealt far better than President Obama handled the Great Recession. Your view?
Well, they were both a disaster. If you look at the Great Recession, we bailed out the people on top. We had no accountability, really. We didn't have people that were literally ripping all of us off, going to jail, or really have almost any kind of accountability other than a slap on the wrist. And what we're seeing is more of the same. We're seeing 2/3 of the bailout go to these huge companies that have just turned around and given all their money to their shareholders. And we're seeing very little of it going to regular people, very little of it going to small businesses. And prior to the pandemic, people were being squeezed. I mean, I've been reporting on my Twitter account how actually average wages have gone up by about 8%. But the reason why is telling. It's because people at the bottom have lost their jobs. Their jobs have got taken out by robotics, by these things that we are giving corporations money to basically engineer regular people out of the economy. And so the type of statistics that somebody like Greg looks at, and he's doing a great job looking at them, are not statistics that actually reflect the benefit to humanity. These macro statistics are so polluted by the level of inequality that we have now, they basically don't really tell us anything about how life is for regular people.
I think this time the great effort was made to get money to people, first of all, and then also to small businesses, which is the really, the backbone of our economy. And I can agree with Dan on that. I think the focus should be on small and medium-sized business. We've actually seen a real spurt in new business applications, which I think is good. Prior to the pandemic, I mentioned that $4,300 a year. We had $3,000 of wage growth in 8 years, and then we had 4,300 just in the last year. So you're seeing some really good numbers. I mean, yeah, I can agree that the lower rung of society in terms of wage earners was lost out for those 8 years. Okay. But there's a massive. This is a bit like the Morning in America in 1984. Prior to the pandemic, you had just a fantastic optimism, small business optimism, consumer confidence numbers have bounced back considerably. So look, I think the reason the president is doing a good job is he put in the policies in place, which was tax reform and deregulation, and that's benefited a much greater segment of society. In fact, the lower wage earners have had much higher wage growth than higher wage earners.
Yeah, sure. Let's zoom out a little bit, Matthew and Greg. Let's zoom out. And I'm glad Greg brought up, the 1980s, because over the last 40 or so years, we have gone by design into a world where regular people are being squeezed, and we have a massive consolidation of wealth and power on top. Now, how that might look for you if you work for a big corporation is you're being laid off, you're being increasingly automated out, and if you're lucky enough to keep your job, you're being told you're lucky to be there, and the corporation really doesn't need to offer you anything. That is a horrible existence, but we don't have to go back too much before that to a time when we had progressive tax policies. The wealthy people had to pay their fair share. And the economic policies were meant to provide a floor for regular people. There's two reasons why people aren't starting businesses. Number one, they can't afford it because they're running from one thing to another and they have no freedom. And number two, their health care is tied to their employer. So the employer has such a large implicit threat over the health and welfare of regular people. And this system is completely perpetuated by the type of deregulation that Greg is advocating for, because while it does in the short term stimulate the economy, that's true, in the long term, it takes money out of our pockets. I just got an advertisement texted to me to lose 200 pounds. And, if we say that corporations can text every single person, you should lose 200 pounds, even somebody that looks like me, they do make money. So that makes the GDP go up. Guess what? It also makes all of our lives worse. We need to shift to economic policies that put humanity first. Stop talking about GDP and talk about what it's like to be a regular person right now in 2020. And it is not a pretty picture.
A final question for you both. Greg, we're going to start with you. How important is the economy in this election? Who do you trust more with the economy? And what's your prediction for the election outcome?
The economy has moved back to the #1 position in terms of priority for the voters. The president is polling much better, so he is in a much better position to navigate the economy. Will he win? Too close to call.
Well, what we're referring to the economy really doesn't matter to most people. Neither candidate is really putting the type of very aggressive policies in place that would fix the economy for regular people. And it's pretty much a coin flip. So you need to go out there and vote. I'm going to be voting despite of what I just said. And we need to take back our democracy. And we need to remember that this fight goes on way past the election.
Okay, let's move on. Dan, stay with us. Greg, thank you for your analysis. We're moving on to those big tech companies now that have done so well out of the pandemic. And none more so than Amazon, which has delivered more parcels than ever. As a result, its shares have risen around 65% since the beginning of the year. which is great news for its CEO, Jeff Bezos. Here's a few fun facts about his fortune. We all know he's the world's richest man. He's been #1 for 3 years. But did you know that during this pandemic, Jeff Bezos practically doubled his wealth? On August the 26th, he became the first person in history to amass a $200 billion fortune, all thanks to his 11.2% stake in Amazon, the company he founded in a garage 25 years ago. Its shares have drooped a little since that peak in August, but he's still worth around $175 billion. That is a mind-boggling figure, and the internet is awash with attempts at trying to make sense of it. First step is to understand that $1 billion is 1,000 million. So, Bezos' wealth is equal to 175,000 millionaires. Put another way, even if you earned $10 million a year, it'd still take you 17,500 years to catch up with him. And even if you earned $500 million a year, it would still take you 3.5 centuries to match Bezos. Real-life comparisons are just as crazy. It takes the average American worker 3 years to earn what Bezos earns in just 1 minute. He's so rich that to him, $1 million looks the same as 50 cents to the average American worker, which makes you wonder why he doesn't spare a little more change for his staff. Okay, Dan Price is still with us, and we're now joined by the economist Joe Kennedy, who, on the whole, thinks that Amazon and the other big tech companies are a net benefit to society. I want to start with Dan. You can pick apart his understanding of Amazon. Why do you hate Amazon so much, Dan?
Well, Amazon basically uses its huge infrastructure and even more our public infrastructure to consolidate so much of the economy under its own control. And so when Amazon creates one job, it destroys 2 or 3 or 4 jobs from small businesses, from Main Street businesses, and it consolidates all of that wealth to Jeff Bezos and rich investors, and basically erodes the bedrock of our democracy by being so ruthless and extreme in the way it does it.
That's an extraordinary claim. Joe, it's not a net benefit at all. It's actually harmful. Everyone thinks they're creating jobs, but on a net basis, jobs are destroyed.
Yes. Well, in that summary, 2 things were missing. One was the tremendous benefit to consumers who get a much wider choice, lower prices, greater convenience, and quicker delivery. But also the benefit to small businesses that can now sell over the web without having to create their own web page, without having to handle orders themselves, without having to buy a lot of computer equipment and store data and protect it from hackers. So we've always had a debate over this size of bigness, and there's part of the American psyche that's uncomfortable with bigness. But going back to the great A&P store, businesses that have succeeded in becoming more efficient and reducing prices and increasing quality have always been attacked because they're big, and because a lot of times...
Is that it, Dan? They're just being attacked because they're big?
No, because bigness in a winner-take-all economy leads to trying to be and acting like a monopoly. And you can see that all over the economy. As soon as these large corporations have the level of control to exert, they lay off their workers, they put their workers under the control of robots, our service suffers, we get nickeled and dimed to death, and it's true that some of these large corporations on the way up, when they're building that monopoly, when they're consolidating their power, they don't behave as badly to consumers. But eventually the shareholders demand that they do, and the CEOs get big bonuses for complying and capitulating. And even the modest gains for the consumers get eroded. And by the way, as a consumer, it's so great to go to your Main Street store, to support them, to talk to a human being, to get helpful advice. All of that goes away in the age of Amazon. And as much as I like YouTube, it's not going to replace human relationships.
Let's just have a listen to what happened back in July when Congress got a chance to query Amazon about these alleged dirty business practices. Let's hear the question about how they copy other sellers on Amazon and then drive them out of business.
We heard from a small apparel company that makes and sells what they call useful apparel for people who work on their feet and with their hands, like construction workers and firefighters. This particular business discovered and started selling a unique item that had never been a top seller for the brand. They were making about $60,000 a year on just this one item. One day they woke up and found that Amazon had started listing the exact same product, causing their sales to go to zero overnight. Amazon had undercut their price, setting it below what the manufacturer would generally allow it to be sold, so that even if they wanted to, they couldn't match the price.
Joe, that sounds terrible from the business partner's point of view. Does that happen a lot? Isn't that incredibly damaging?
Well, first of all, I think Amazon is not the only business that offers its own products in competition to other products that it puts up. Walmart does the same thing. Shoppers City does the same thing. In fact, Amazon's, the share of money it makes from its own brands is much, much smaller than other major retailers such as Macy's. The second thing is that the vast number of interactions with third-party sellers over Amazon benefit both sides. And then the third part is, let's say there was a shoe company that came up with a new brand of shoes that was very popular, and it sold those shoes only on its own site. And let's say Amazon saw those shoes being popular and developed a similar shoe that is sold for 10% less. Would that be bad for the country? I don't think so.
Dan?
That's the way the competitive economy works.
It's very simple. Amazon takes our public infrastructure, they hurt it, they use it, they exploit their workers, they exploit the environment. Their shipping is terrible for the environment. They take all these community resources, they consolidate them, they create a monopoly, and then they squeeze all of us. The playbook is so simple, and Jeff Bezos might say in this case that it was an accident, but he put so much pressure on his team and on his employees, he forces them to cheat. This just gets worse and worse as time goes on, and life gets worse for all of us, and they make a fortune off our backs.
Dan, you say they don't pay enough, but he would have said, well, he did say in Congress that Amazon pays twice the federal minimum wage. So instead of $7 something, it pays in the region of $15.
Yeah, that's true. And he has a robot that forces workers to work way beyond anything that's humane. He times workers going to the bathroom. He fires workers for taking sick days during a pandemic. And he's gained enough wealth during the pandemic to pay all of his employees the same $70,000 minimum wage that made me famous. And still, he would have 2/3 of the wealth he's created left over for himself. So he can absolutely afford to pay way more. And the quote unquote $15 an hour that he pays comes at a cost of working conditions that are beyond dangerous, mentally, physically, and beyond humane.
Joe, do you think Amazon should be treating their employees better?
Well, I'm sure that if I looked at specific business practices, I'd find a lot that I think could be improved. But that's not really the question here. The question is because we have a federal agency, OSHA, that's supposed to look at working conditions and take action if conditions are dangerous. So we already have that, and you can argue that they should be more proactive or more aggressive. But the real issue here is, are we going to break up companies like Amazon? Are we going to separate the control of the platform from their ability to sell over it? And I think that we don't need that kind of a radical solution.
If you talk about OSHA and worker protections, I mean, Amazon and other wealthy companies funnel huge amounts of dark money into political races, into influencing our democracy and public discourse. So, the first game might be controlling the economics and taking away environmental health and public health and consolidating that. But then the second game is using those gains to take over the political system. And so there are so many different reasons why we need to break these companies up, why we need to go after them. But secondly, the future looks pretty dark if we don't act aggressively and quickly.
Joe Kennedy and Dan Price. On that note, we'll leave it. Thank you so much for your contributions to the Nexus. And thank you at home and on your phones for watching. Remember, if you want to see this episode again or any of our previous episodes, go to our channel on YouTube. Just type in Nexus TRT World. Until next week then, goodbye.